What's up? What's up, everybody? Hey, I just wanted to welcome you guys this awesome morning to the Real Estate Power Play group. I have a really fun opportunity to interview the OG, the mentor, the man, Tom Barry today. We're just going to go over some really awesome things, market conditions, what's happening in the market, and cool. We already got people responding on here. I do want to invite you guys to ask questions because this is going live on Facebook and YouTube and the other channels that we have, our North Houston Real Estate Investor Group. So ask questions because this is an opportunity to get Tom on your own personal chat, and I'll be happy to get some of those going. So, Tom, how have you been, man? What's going on?
Hey, I'm doing awesome, buddy. I am doing awesome.
You are always doing awesome. That's what I love about you. You just came back. So where was the family trip? What's going on? What was up with that?
We just got back from, we took one of our kids and his family to Niagara Falls, New York, and spent, 4 or 5 days up there with him and his family. Spent a little bit of focused time on that particular family. And then next week, we're headed to Colorado Springs, and we are taking the entire family, all of our kids, grandkids. There will be 21 of us just tearing up Colorado Springs next week.
I love it. I love it. And for those who don't know, one of the things that Tom has taught me about just building your business is what's the point of doing it all. And one of the things he's taught me is just learn how to create great memories that just last. And there was a time when you had to make me take vacations, and you're like, Gabe, you have to go take a break.
I remember that.
Literally, I booked the trip the next day, guys.
You were a slow learner on that particular point, but you did get it. You did get it.
I got it. The very next day, I did something with it. So my wife is very happy. My friends, my family is very happy you taught me that. So those who don't know, what is that like? I mean, like, we could dive into that real quick. I mean, this is one of the things, if those who are watching this right now, they know who you are, they can look you up, and we'll go into that. But man, you've been doing this for how long, of just supporting a family trip every single year, right?
Yeah, this is the 11th year that we have done the family vacation, we call it. And, when Melissa and I got into real estate, we were broke. Everybody knows our story. And we were sitting down saying, what would we like our life to look like eventually? And basically, I call it designing your own life, right? So one of the components to that, that dream design was, we'd like to take our family and extended family. Now, at the time, we just had 4 kids. None of them were married. They were still in college or the Marine Corps or the Army. So most of them didn't even live close to us at that time. But we said, eventually, they're going to have families, they're going to have kids. And we wanted to be in a position to be able to take everybody, regardless of how many that was, somewhere on our dime and pay for everything and live with them together as a family for 1 week every year. So Melissa she is our event coordinator, and she will find an incredible house somewhere every year. And that house obviously has had to be bigger and bigger every year.
My goodness.
But yeah. And we live under the same roof. That's another requirement for it, is that we all, we're not like in different houses, different hotel rooms or whatever. Mm-hmm. We want to live together as a family for 1 week and just spend quality time together. And we talk about everything. There is nothing out of bounds in our family. We're not a talk about the weather kind of family.
Right. That's one of the coolest things that you taught me, is how to create these memories and do stuff like that. So quick story. We're in Mexico, and last night, and this is when I want to do the recap, right, Tom? I want to know, what'd you get? What was top 3 things you guys had over the break that just was really fun? And we spent 8 days down there. And so this is my idea, right? And we're at this resort. So we're going to this restaurant's packed, and they go, well, you can do this. We're really packed, but we have another family of 5, and we have a 10 top. And I'm like, God, I look over at my wife, and I'm like, she's like, look, we're hungry. The kids are, and I sit down, Tom, I look across and I see some other guy's family across from this table, and I go, we're leaving. And the kids, they're hungry, right? We go to the sushi place instead. That's in the same resort. And I'm walking out and I'm going, listen, I didn't work my butt off to share memories with some other guy's family. That's not what I'm doing. I worked my butt off so we can be here together. And even though we're not underneath one roof at some, a different resort, this is family time for us. Like, this is where we win. This is where we start building stuff now. And it was kind of like an emotional moment for me. They're looking at me going, Dad's crazy, right? But, for me, I'm just going, you got to draw your line in the sand of like, what legacy are you going to pass down to your kids and to your family? And that's one of the names, guys, for if you guys don't know Tom, some people call him the Tom Father, which is kind of funny little joke, inside joke for those who know him, where he just plants so many seeds in people's lives of helping them build their family legacy. He used to do the 5-year plan so many times and helped hundreds of people grow. So let's jump into a couple things. First of all, we have people in Michigan, New York, Florida, Louisiana, Oklahoma that are listening to this. So for those who don't know you, let's do a quick recap of like who you are today.
Yeah. So today what I do is, we have a private money lending company. We lend in 23 states. We have a couple of private equity funds that people invest in from all across the country. We use those funds to purchase the notes from our private lending company so that we are recapitalizing ourselves constantly so that we have money to lend. We'll probably write somewhere north of 300 million in loans this year. We have written more loans every year than the year previous. And that is always our goal, is to beat last year, right? Always in competition, but only with ourselves. And, other than that, my business partner and I like to buy commercial assets. We like to buy commercial real estate, office buildings, and retail in particular. We will look at other asset classes, but those are our two favorites. And I'm a family guy. I have a big family. We spend a lot of time together, probably more than most families do. And we enjoy it. A lot of times when we're on vacation, people look at us and, we're all wearing our family vacation T-shirts or whatever. And they go, oh, my God, you guys are crazy. I would never want to spend that kind of time with my family. And to me, that's just the saddest statement you could ever make. Right. That's not me, and that's not us.
Right. Whoa. So, a side hint, when we were we went to go on vacation, there was a family that had a trip like that, and there was probably like 20 people. And I go, babe, stay away from them. Okay. I was like, every line that they're in is going to take forever. Just don't get in any line by them.
Yeah, we get that too. No doubt. No doubt. So that's kind of, my history. I love this business. I don't have to do it. I do it because I enjoy it. At this point, I could stop working and I'd be fine the rest of my life. But I don't really consider what I do work. I get to hang out. I get to analyze deals. I get to make, negotiate. All that stuff is fun for me. I get to create. I get to provide employment for many, many families. We have over 40 full-time employees. That's over 40 families that we provide full-time income for. And that means something to me. That's something we're really proud of. And, spare time, I'm a gun guy. I love guns. I collect, I shoot, I hunt. And that's pretty much it. I don't have any other hobbies other than travel and hunting and shooting.
So that's the recap of the Tom Berry, guys. And this is like I said before, this is a guy who's definitely transformed my life and my wife's life and just everything that we've done. We give a lot of credit to Tom. I probably talk to him about once a month, and then we text throughout of just updates and stuff with the market, and we joke around and we have different side jokes of like, this is what we see happening, and what goofball decision is going to be made next, stuff like that. At the core of it, guys, it's normally comes down to, Tom, of like, okay, but how can we help other people? Because really, it's how we change an environment, right? Is like, you have to do it yourself, right? And then you're bringing other people around you, because one, it's good to have friends around you that you can enjoy this extra time that you get, right? And then meet new people and stuff. But then at the end of the day, you know that it affects the current economy, the current marketplace, and it affects a lot of people's lives. I know you used to run the Wealth Club, and you, like I said before, I don't know how many. I think I've gone to 2 or maybe even 3 5-year plans, so that you have led. So market conditions. All right, this is the fun stuff. You have a lot of great stories that I have internally that I actually share with others of going, okay, do you remember how Tom built his empire? Like, what did he do? How did he do it? What is the scariest things that happened? What are the things that he says now that he would prepare differently now that he knows? And what people don't know is that you would prepare differently also based off of who's in charge, what's going on with the market, what's the current market looking like. It's not the same as before, but some of the high level indicators are still there, right? As the same like downward cycle and stuff like that. So let's just go from there. So what are you seeing right now in like just current market that you can help? Most of our people are newer people, novice level. Some of them have, 100 doors or something, but they really haven't broken into big commercial stuff or built massive legacy type things. What
Right.
can you say right now is going, look, guys, this is what I see?
Well, let's start with what to look for, right? Because it's not about what I see. It's more about teaching other people to be able to see it for themselves so that you're not having to listen to some guy on a StreamYard call. And you'll know, and you'll know for yourself how to prepare for what is coming, right? So that to me is the more important question. I think the 2 things that I study, and I think anybody in business in general, not just in real estate, but in business in general should study, is politics and economics. Those are the 2 things that I focus most of my study time on. I study politics and I study economics because those 2 things are going to have more of they'll have more of an effect, more of an impact on your business than anything else that you could study. So given those 2 parameters, what I see right now is very unusual. I've been doing this for a long time. I've been a full-time real estate investor and business guy for over 25 years now, 15 of that in real estate and 10 previous to that in finance. So I'm taking a look at all of this stuff and going, never seen this before. Never seen that. Not in 25 years. Another pitfall that I see real estate investors in particular fall into is they fall into this singular mindset of, I know what's going to happen next. Therefore, I am going to prepare in that way. And I would say that is an extremely arrogant attitude, borderline narcissistic, to believe that you got this crystal ball in your head and you can just guarantee this next outcome.
Right.
What I rather do is I will sit down and calculate on a quarterly basis what I think the top 3 likely scenario outcomes are.
That's good.
And I prepare for those 3. I do not prepare for what I think is going to happen. I prepare for the 3 most likely outcomes that I can see. And those likely outcomes obviously are a result of daily, not weekly, daily research, daily reading of article after article, economist after economist, report after report, and studying the political tea leaves as well, because those will have an effect. So based on that, I could make a very good argument for 3 likely scenarios. The first one, and we'll just stick with single family for a moment. The first scenario is that inflation continues at this high pace. It drags us into a recession with an accompanying stagflation, meaning stagnant growth, no growth, high unemployment and high inflation all at the same time. Think 1970s, late 1970s, early 1980s. High interest rates as a result, with the government trying to bring inflation back into check. I could argue that very, very easily. And you'd have a hard time refuting it with fact. That's the problem. We're trying to predict the future. There is no fact, right? We have data, but no facts.
Right.
So that's first scenario. And in that scenario, real estate prices could do one of two things. They could continue to climb because of inflation. They could fall some because of a lack of demand. Now that's scenario number one. Scenario number two is the Fed chairman hits his soft landing he said he's going to hit, doesn't raise rates enough to collapse the economy, but does raise it enough to get inflation back in check. And by the way, I don't think rates are the only problem with inflation. Supply chain issues are still just as big or bigger an issue than interest rates being artificially kept low. I'm glad rates are going up. They had to at some point. I honestly think that they should have gone up earlier. I think the Fed was a little bit behind. And if I were raising those rates to get ahead of inflation, I'd have popped it with a full point right off the bat, 100 basis points right off the bat, chalked the hell out of prices. But you know, I don't have a college degree, so they didn't ask me. So I think they're behind the 8 ball.
Yeah,
we'll see that again. I believe next week when the CPI comes out again, and I think it's still north of 8.
Yeah,
and that's going to be a problem. That's going to be a problem. If that's the case, you'll see another 75 basis point bump this month with the Fed funds rate. And I think they're going to keep popping it at 75 until they get that CPI below 8 and trending down in the right direction. That's the second scenario. The third scenario is in between, right? So we've got worst case, we've got best case, and then there's a scenario in between that says, all right, inflation is bad, but what does that do for real estate prices? Inflation does what to real estate prices typically? It raises them, right? Increase. So real estate prices continue to go up, but not at the pace, the breakneck pace we've had over the last 2 years, right? Of 20% per year in some markets and more in others. It's just been crazy. Right. So that may level off some and just continue to go up along with inflation. The real key, I think, is the demand side of real estate. The guys that argue real estate is never going to go down, it's always going to go up, there's no room for it to go down. The thing that they use for their argument is demand. People still want to buy houses. You know, you put a quality product on the market today in Houston, you're still going to have multiple offers by the end of the day, particularly multiple offers by the end of the week. You know, our daughter just put a house up for sale about 2 miles from where I'm sitting, and she had, like 7 showings the first day. Yeah. They had multiple offers by the end of the week, and she had her pick of the litter of those offers, right? That's what the bulls in real estate market are using as their evidence that real estate can't come down in price. Right. I will counter that with the argument, and I'm not saying that this will happen. I'm not making predictions. I'm just giving you analysis. I would argue that the media could kill that demand in a month. Yeah. If they start touting from the rooftops that the sky is falling and real estate is collapsing, what does that do to the psyche of the buyer? Which they're starting to do. Which they are starting to do. You know that's going to happen. And I believe that all this demand that we're seeing right now is not necessarily going to be there forever. It's not. People are going to get the memo that we're in a recession at some point.
Right.
I think recession is inevitable. I don't think that I can make an argument against recession
Right.
with any logic at all. So when that starts happening, you're going to see people pull back on buying. We're seeing it now already, just
Right.
with a little bit of interest rate rise in the mortgage market. We've seen a huge pullback in the demand, and that's I think is really just the start of it. Now, does it pull clear back to the point where housing prices have to fall to get people to buy them? I'm not saying that. It could.
Right.
It may not. I think the likelihood is not, if you want to be honest about it.
Right.
Now, in certain markets geographically, I think you'll have bigger issues. If you live in some of the places that you mentioned, that we have listeners listening, if you live in a market that has a out migration problem, in other words, more people are leaving your area than coming to your area, you may see prices falling a little bit in those areas, right? That's just common sense. Now, if you live where I'm sitting right now in Galveston County, Texas, or Harris County, Texas, or anywhere in Texas, to be quite honest, any major market, these are net immigration markets, meaning
Right.
more people are coming to these markets than are leaving. And there's quick ways to figure that. You can go to Wikipedia and look at the migration trends for your market. You can every 10 years when the census is done, you can see if you've lost electoral votes and congressmen, or you've gained electoral votes and congressmen since the last census. That's going to tell you if more people are leaving or more people are coming to your area. You can look at that historically, and then I would also look at it more immediate to see if that trend is still trending. But there are people leaving certain states. Most generally, those states are the high tax, high regulation states. And the states that are picking up the most population are the states with less tax and more freedom.
Yeah.
The two biggest ones that are picking up the most right now is Florida and Texas. And I think that is really what you're going to see going forward. We're going to have a lot more migration in this country. And the migration is certainly going to be to those states with less taxation, less regulation,
Right.
and better climate, to be quite honest.
That's true. That's true. Those who don't know, he was saying look up migrations through Wikipedia and whatnot. For those who are asking questions, I have Ken. He's normally a good commenter on here. He's just saying, hey, what kind of books and recommendations and study economics? I'm gonna tell you guys. I remember being in Tom's living room and him going, "You need to know these things." And this was before this past election, right? And guys, I listened to him and I dove head first. I mean, so far into like not just like parties and party lines, but just politics in general, economics in general. And it took me a while to learn, but I went head first into it. And I think it's helped me be more prepared, Tom, than ever before. I can't see the future, but I don't know if there has ever been a time that I'm like, hey, I could see three scenarios right now. It was like you see one, and that's get out of debt. That was like the scenario from before. And now I'm going, I can actually see your three scenarios. And then another thing I want to hint towards those that you said is don't be so steadfast, especially the real estate guys that are saying, hey, either it's going to go up or it's going to go down. Like look at multiple other options and then also different marketplaces, right? So I'm hearing some people in marketplaces in Ohio and some of the other, the breadbasket areas that are getting hit a little harder because there are migrations. People are leaving some of these areas in like Michigan and New York and whatnot. So I am hearing those stories. For those who know Tom really well in the Houston metro area and all of Texas, we're talking about a really good market over here that we really haven't been hit very hard. And I get phone calls from realtors over 18 days late. 18 days DOM, and they're going, Gabe, I need to get an offer. And I'm like you really want my type of offer? And they're going, well, I just kind of want to see. And then when I give it, they're like, oh, wow. I'm like, this is who you're dealing with. Like, what are you talking about? You don't want to wait another 20 days? Like what's happening? And so I think some of that is exactly what you're saying. I think the media is really playing into this. And a lot of the brokers and realtors are kind of going, oh, man. And then what happens next? They affect those sellers, right? Because they're the ones advising the sellers.
Yeah. Well, case in point, we just closed a commercial asset yesterday, and that was an off-market deal. The sellers put it on the market at $7 million, and we ended up closing it yesterday for 5.250. Because and honestly, the appraisal came in at 6.7. So they priced it very reasonably for the market, but they didn't want to wait. They just didn't want to wait for a retail sale. And so they said, hey, what would you give? I told them what I'd give. And lo and behold, they beat me up and got another 50 grand out of me. And I said, okay. So those sellers still out
it appraised at 6.7.
They're out there all the time in any market. There are just more of them in a down market than there is an up market, obviously.
Right. Did you say it appraised at 6.7?
Gabe, you froze up. I can't.
Can you hear me now? Check. Can you hear me now? Yo, hello. I can see you.
Yeah, I can see you, but you froze up. Your video froze up.
All right.
You're back.
Can you hear
now.
me?
Yes, I can hear you now.
Did you say that it appraised at 6.7?
Yeah.
Wow. Okay, so for those who don't know, and you got it for 5.2, so 50K isn't that big of a like that. Okay, cool. Let's negotiate.
You're still froze up, Gabe.
All right, I'm gonna mute this real quick and stop the screen. But can you hear me?
You're still froze up.
Can you hear me? Can you hear me now? I wonder if it's yours, Tom. Yours is froze now. Test. If you can hear us, and we're live right now, so if you guys can hear this, okay, you guys are good?
I can hear you now.
Okay. I'm having people saying they're seeing both sides of us, which is cool, I guess. They're commenting. So I want to hint, though, that this is a big spread just by someone being motivated, right? This is, and in this, in those who know us, like from the single family space, they might be going, well, motivated seller has to be, all that you put all these criteria next to what is a motivated seller. And mainly that's for a newer person who's trying to go, I didn't even know you could get a discount on a house or on a property. But in retail space, meaning the retail strip center that you have, what is a motivated or someone who's just like going, hey, I'm willing to sell at a discount, even though I know this, is it like, what are some of the factors that you're looking at? And we'll just go into this property, because I think this is a great deal for people to a good case study.
Yeah. So the reason for the motivation for this particular seller is they didn't own it. It was their parents' property. The father owned it. He passed away. It dropped down to 3 kids. And, from what I understand from the broker, some wanted to keep it, some didn't want to keep it. And the ones that didn't want to keep it, they just wanted their cash, kind of pushed the sale of the property. And so everybody just threw up their hands and said, fine. Well, if you gotta look at it from their standpoint, every dollar they got from it was free money, right? They had nothing in it.
Right.
So this is just a huge windfall for all of them, for all 3 of them. And it didn't really matter what the number was. The question was, can you close, and how quickly can you close?
That's good.
Are you real, right? In commercial, even more than residential, the question is always, are you real?
Are you real?
I have a really good friend that just got an offer on his entire portfolio. He owns houses and apartment complexes. And I believe the offer was $20 million for the entire portfolio. And he was on the phone with me yesterday saying, how can I vet this group to make sure they're real?
Right.
So we're going through all of the things that I would ask, all the things that I would look up, all the things I would require from this group, because he has multiple offers. And you know, he's just like, I don't know these people. How do I know they're real? How do I know they're going to close? What is the number one question for a seller is, are you real? Can you and will you do what you say you're going to do?
And for a seller, for those who don't know, what are one of the things, including myself, one of the things that a seller, why are they asking that question? I have a couple answers myself, but why would a seller go, how do I know if this person is real? Because why?
Well, because they don't want to tie up a property under contract when they could be selling it to somebody else that is real, right? My first exposure to this concept was in early 2011. We were buying our first apartment complex, a little 36 unit in Galveston, Texas. And the broker who found the deal is a very good friend of ours. We travel all over together. She called me and she says, look, I just talked to the bank. The banker was the guy selling it. It was an REO. And she says, he already has an offer, and that offer is higher than yours. My offer was $555,000. The other offer was $575,000. And she said, but he told me to verbally let you know he is going to accept your offer, and we'll have it in writing by tomorrow.
Wow.
And I said, why? I didn't understand that. Why would he turn down 20 grand that the bank could get? And she says, well, he asked me if you were real or not. Right. And she said, and I explained to him all the things that I have sold for you, and that I know you and Melissa really well, and that the four of us travel together. And if you say you're going to close, you're going to close. I have never seen you not close. And she said, he cut me off and said, that's all I needed to know.
There you go.
Call your friend and tell him he's got the deal.
Awesome.
So that was my very first exposure to it. Now I'll give you some advice for sellers on this, your listeners. When you're buying a property, keep a log of when you made your offer, when you contracted it, and when you closed it, and keep a tally going. And that is your resume. And when I was buying apartment complexes back in 2011 and 12, we were closing a complex every 48 days. We did that, and we virtually always got our offers accepted over others, because I included the list of all the transactions, commercial transactions, that I had done, and how fast from contract to close we closed. And our average back in the day was 16 days from contract to close on apartment complexes. Well, if you see that history as a seller, and then you look me up online and you see, he does have these assets. Holy crap. Yeah, I want his offer because I know he's going to perform. Right. And that's how we beat out a lot of other guys, even bigger guys than us, because we had this resume put together. And that was the last sheet in our resume. It was an 8-page resume. We had pictures of our properties and how much we paid for it and what month we closed it and what we did to it, how big the property was. And my daughter had put together this beautiful resume for us. And with every offer, we included that resume. And the last page of that resume was line by line by line, all the properties that we had closed, and how quickly we closed them, and what the price was. So we wanted them to understand we have done deals like yours before. We have done deals of this size before. This is not out of our league. We are not stretching above our capabilities. Those are the questions that a seller is after. Those are the questions that they're too embarrassed to ask. So answer it for them. Don't even make them ask it. and you'll get your offers accepted.
Yeah, man, that is so good. And I'm so glad you shared this story, because I've been sharing it. And I told you before that, like, I've been sharing your story of going like, look, guys, when this happens, like, you don't have time to mess around with these other things. Like, start getting, the way we call it in our household, in our business, is protect the castle, get the castle going, build a moat so you could go get the land. Like, that's their thing. And I think that people might not be focused on that too much, whether they don't know that, hey, their castle might not be set up right, or they need to build their moat of protection around them so they can be prepared. Thank God I know you, and you've helped me do all that stuff mentally to prepare my team and stuff. But as I share this with others, even your 3 market conditions that you're looking at, saying these are probabilities, it's interesting to see that it kind of goes over some people's heads. And I'm going, maybe you don't understand. So I'm going to share with you this story. My mentor would buy multifamily properties every 48 days. He was closing on a new one. I was like, you not only have to be able to do that, but you have to have the team to maintain the past 6 that you just bought. Like, this isn't a joke. Like, this is, as you move forward, this isn't just acquiring a single family and I could flip a house in my sleep. Right. And that's not that. This is like a different scenario.
So yeah, but it's really the same. It's really the same. It's just more zeros. That's all.
Right. Okay.
Just more zeros. If you're comfortable flipping houses, you ought to be able to, eventually to get comfortable flipping commercial assets. Right. Of your own choosing. You choose the asset class, and choose a couple of asset classes, and don't choose based on what you like the best. Choose by what is in favor right now. Right. And when I say in favor, what can you buy at a discount? I don't buy anything if I don't buy it at a discount. I've gone a year, 2 years before without buying a piece of real estate, and in Houston, some people call me the Tom Father of real estate. Well, sure. Some real big Tom Father when you can go a year and not buy anything. Right. But I am very strategic in what I buy, and I will only buy if I can buy it at a discount. Look, I lend all over the country. I lend to a lot of real estate investors, and I have seen some go sideways, right? The biggest problem people can make is paying too much. It's the only mistake you can make that you can't come back from.
Right.
You can come back from that one. You can make a lot of other mistakes in real estate and still be able to weasel your way out of it, right? I've made most of them, right, over the last 15 years. But paying too much is the one you can't fix. That's the one you can't come back from. You are stuck with that one for the life of owning the property. The only way out of that is to keep the property an entire market cycle or longer, to try to help inflation and appreciation catch up to what you paid for the property.
Yeah.
That is a long, long way out.
That's a hard price is to pay with time, right?
Yes. Yeah. So buy at a discount, and you can never go wrong. You can never go wrong with that.
So those who know Tom, he has a funny meme that he put out there of himself on it's like a mini quad. Okay.
My grandkids quad. Yeah.
Is it? And so I remember, I know where that was because I've been out to your ranch and stuff. And, he puts a highlight on there. It's like, man, I am pumped up for this next season. And I think a lot of people think that the next season is today. If they misunderstand it, that you're going, most people don't see how far in the future you're projecting and how you're looking at things and how your excitement's going. Oh man. Like I'm excited today, right? Because you just bought something really fun, but I'm also excited for the future. And, when people aren't investing and maybe they're just starting off, Tom, they might not be seeing all those perspectives. They're just trying to, buy their commercial property or do some, like for us, we're doing some light industrial type stuff. And I'm like, okay, I'm kind of focused on that. I know what I'm doing, but to be excited, right, on what's coming. And it's not like, we talked about it recently, and I just want to preface that so that we don't go too far off. But it's not like, okay, what's coming, doom and gloom. But it's like there's a lot of there's still a great future ahead of, especially for business owners. Let's go in that direction, and let's just kind of encourage some people of how to look at that.
So let me interject here a minute, Gabe. What is doom and gloom for some is opportunity to others, and it's the same exact time. It's the same exact thing.
Right.
You know, when we were buying apartment complexes, um, and yeah, we were closing one every, so many days. It was like averaged 48 days. But that was average. I averaged that out. There were times we were closing them back-to-back months. There were times we were closing back-to-back weeks. There was times that we wouldn't have a closing for a couple of months. But the average came out to that. And I remember at one point, my wife looking at her computer, because she handled all the accounting and all the banking for us. And she looked at me one day and said, how many unprofitable properties does one couple need? She was very frustrated because it's true. We were buying properties that had problems, right? Because that's where we could get discounts. We could get a discounted property because it was vacant, or because it was 30% occupied, or because it needed a major rehab and we had to dump $250,000 into it. Those were the things that we were able to buy at a huge discount. So I understood her frustration. And I remember pulling up a seat beside her and I said, babe, as many as we can get, as many as we can get. And she's just like, honey, I don't understand. I know you have a plan, but I don't understand, and I'm not on board with it, okay? Because I don't understand. And I said, babe, the window is closing.
Right.
The window for buying at this huge a discount is closing. And it's only going to be available to us for a short period of time, and then it's going to be over. And I don't know when it will come back. It will, but I don't know when in our lifetime it'll come back. Now, that conversation took place in 2011, and it hasn't come back until now. It is not back yet, but I see it coming.
Nice.
And that's why I'm excited, because I've waited over a freaking decade for this.
Yeah.
And this time, I know something. Back then, I didn't even know anything, right? I was figuring it out on the fly.
Right.
But this time, I have capital available to me. Last time, I was stepping and fetching to fund every deal.
Right.
Just praying and begging to get the funding together for every deal that I did. This time, I'm in such a much better position. This time, I have 40 employees. Back then, I had one employee. Okay. This time I have resources, virtually unlimited resources. This time I'm going to do it right.
Right.
This time it's going to move the needle big time. Now, let me tell you what last time happened and what it did for us. Because we rode that wave, and because we closed as many as we could close. And then we spent the next 2-3 years getting all those properties up to optimum and then selling them as the market took off, right? And we made millions of dollars. It's put us on the map. It set us up. It created our moat, as you put it earlier. It built a foundation that was solid for us. So what I say to people all the time when I speak publicly is money is made in good times. You can make a lot of money in good times. And we have over the last decade, anybody in real estate that has known anything has made good money. But wealth is built in bad times. And if I have to choose between the two, I favor wealth.
Right.
Always have. I make enough money to live my desired lifestyle, but at the end of the day, I'll give up money to build wealth. But I know I have to have enough money to live on.
Right.
You got to have that.
Right.
But I will take a discounted property with 1.5 million in equity any day.
Right.
Over a quick buck. Because let's face it, that deal we bought yesterday, we walked in and I added $750,000 to my net worth yesterday in one day. just by closing a deal. And
Right.
we added another 750,000 to my partner's net worth
Yeah.
in one day. That's where wealth is made, by buying discounted assets. And if you can buy big ones, well, the numbers are just bigger,
That's
right?
awesome.
We did the same thing with houses back in
Yep.
08, 9, 10, 11, right? We were buying houses and adding 15, 30, 50,000 to our net worth with every purchase, right?
Right.
Now, it took time for the market to come back around to where we could sell it and capture that equity, but it was sitting there on the
Right.
books, just waiting for that perfect time. I love equity because you can't spend it, right?
Right.
I could spend money. I don't know about anybody else on
Right.
this call, but I can spend money. You know, I'm always going to be able to find a tractor, a dozer, something that I don't have at my ranch that I'd like to have, you know, and it's 50 grand, it's 80 grand, it's 100 grand, whatever it is. I can spend money with the best of them. There's always a gun that I don't have in my collection and I would like to. I've never found a time frame where I couldn't find that, right?
Right.
But the beauty of equity in real estate is you can't spend that. You can't spend it until you actually liquidate. And then that is a conscious decision. And you look at that equity and say, what are we going to do with that?
Right.
And yeah, reward yourself with something cool and then take that equity and use that to lever yourself into even more and more. And that's how dynasties are built. That's how wealth is built.
Man, so those who are listening to this, I hope you're really getting in. This is going to be on the replay right when we get done. But man, this is so good. Man, Tom, this is so good. So one of the things I wanted to ask, because I know you've known your partner for years, like years you've known your partner, and it was kind of a happenstance. And then you guys did some deals together and then, you know, whatever. And then you came back and did, you have, you know, just all the many things that you guys do together. For those of beginner size to moderate, maybe, you know, have not done a lot of commercial stuff before, but really want to look at going, you know what, why don't I just go and just buy one commercial property? And just that one commercial property can transform your life, by the way, guys. Like, because it has totally transformed mine, and I haven't even acquired a lot. In my mind, I haven't. At the time, I thought it might have been a lot, but now that I'm there, I'm going, okay, I could do more. But that one transaction has just compounded my thinking. But I JV'd with somebody who's a pro at mobile home parks, like total pro. And so I shopped around for a partner, and I was really looking around going, who is the best for this? And I had people looking at my land going, we could do this and we could do this, all the hype. And this is the only guy that came in and goes, that's a horrible idea. You're going to spend this time doing this. You're going to waste your time doing that. You're going to do these other things. And he just kind of told me everything negative about the park. He's like, the only way I can see you profit would be doing this, and I don't have time for it. And I'm going, that's the guy that I want. Because I don't want a guy who has all the time in the world, who's okay with being out there on the tractor himself.
Right.
I'm trying to collapse time. And I don't know if you've ever spent, I mean, you spend plenty of tractor time. That's therapeutic for you, but it's not wealth creating. You know, I mean, that's not good. You can't hear anything. You're not making a ton of business calls. You know, you can't do that in something else like you could, you know, like walking on your back porch or something. So I'm leading that up and setting the tone of going, I've seen it help me. What do you see about JV and partners? Now, guys, you have to vet your partner. Like, just be smart about it. Okay. And I don't want to go too deep into that, because I see a bunch of people that are just blind leading the blind. But really, to scale and to get yourself to this next place, you partnered in the beginning on some of the things. I know you had a lot of ownership in, you know, the 2010 or 2010, 2011. You owned a lot of it, but you also JV'd a lot too, right? As far as like the management companies and the other things.
No, we really didn't do any JVs. I've done one JV. It was a small little apartment deal in Crosby, Texas. Other than that, we've never really JV'd. I have raised capital and given equity out to capital partners.
Okay, cool.
Back when we were doing our apartment purchases, a lot of them were purchased that way by us raising capital and, giving away a portion of our equity to those capital partners to bring that. So we did that. We did one JV deal, and those folks are still they're a sweet couple. They're still friends of ours to this day. Only reason we JV'd again was for their capital, and they JV'd with us because of our experience. That's what we brought to the table. Now I don't JV at all, and I don't syndicate. I don't raise capital for the things that we're purchasing. My business partner and I, we just buy them ourselves. We'll set up a single asset entity, and we just own those, 50-50 between his wife and he and my wife and I. But partnerships, I'm a fan if you understand how to do them, and I've done them wrong several times before I did it right. And, I explain it this way. A lot of times people will go to real estate events or, a mastermind or something, and they'll meet somebody that's a lot like themselves. And they say, hey, I'm new in this, you're new in this, man, we had a great time talking. We have a lot in common, let's partner. And I would tell you that is the dumbest partnership in the world if you do that. Okay. Because you don't want to partner with somebody that's like you. You could go out and start an LLC and call it Clueless and Cluelesser LLC, and it'd be close to the truth. What you want is a partner that is your opposite and brings something completely different to the table than what you bring. Right. So, I'm more the people person. I know people. I know psychology. I know people inside and out. I'm the public speaker. I can take complex things, break them down, and educate people in a very easy to understand manner. My business partner is a quantitative mathematician, and he is better with spreadsheets than he is people. He is not good at public speaking at all. He is not a salesman. He is not a motivational guy, a inspirational guy. He's just a good guy. So I think when you're looking at a partnership or even a JV, the question you got to ask yourself is, what is the value the other person is bringing to the table? Because I would never partner with somebody if I could get the same thing at less price in a different structure, right? So could I just hire somebody to do what this person is going to bring to the table? And what would that cost me versus giving a portion of my ownership away? That would be far better for me. But when it came to Donald and I, he brought something completely different. He is the detail guy in our company. He runs the accounting department, the servicing department. He handles all the beans, right? I'm not the bean guy. I'll go out and hunt it down. I'll kill it and I'll drag it back for you, but I'm not going to process it. Okay. He's the processing guy. And he has a huge staff in his office that he manages that helps him to do that. I have a staff in my office that helps in the hunting it down and killing it and bringing it home, right? That's the sales, the marketing, all of those people work under me. So what we bring is totally different. We've done personality profiles, and our profiles are total exact opposites.
Wow.
We are total exact opposites.
Wow.
But what we have in common, and this is important, I want to get this across, is the integrity, the honesty, faith. Those are the things that we have in common. Our faith in God, our integrity, our honesty, family orientation, doing what's right, morals, ethics, values, those are in total alignment.
That's good.
And that's what you need to find. Somebody that aligns with you in those areas, but personality profile is your opposite. And brings a whole different thing to the table. We don't need two of me. God knows we don't, right? We don't need two of him. I don't know what the hell we'd do if we had two of him. Right? But one of each, oh man, that's been a perfect partnership. And quite honestly, we started with Investor Loan Source. That was the first thing we did together. We started, we did about $5 million in loans that first year. We'll do 300 to 350 million this year. It has just continued to grow every year. We now have private equity funds together. We have a big office building in Houston together. Now we have this retail center together. And we are both currently divesting of all the things that we did before we got together.
Wow.
Going forward, we don't want to do things separately. We see that value in the synergy that we bring, and we both acknowledge constantly that neither of us would be here without the other. And
right.
I acknowledge that publicly, that I would not be where I am today if I hadn't partnered with Donald.
Wow. Guys, for those who are listening to this, this is so encouraging. I think one of the biggest lessons that I just had a privilege of, that I took to heart, was my wife and I being over with you guys, you and Melissa, and we spent 3 days talking about personalities and how to plan out your future. And, you know, for those who don't know, Tom's a master at understanding personalities. Actually, I was in, when we were this past vacation, I remember you saying, I can tell who people are by the way they dressed within like the first 5 minutes. I can tell by who they are, what they dress, what they say, the first things that come out of their mouth. I can tell what's their motivating factor.
A lot of times.
Yeah, well, we were both bragging about certain things at the same time. We might have had something to drink at the same time that we're talking about this. But it's possible. But either way, I'm there and I'm just looking around and I'm like, okay. And it's good. And the idea of this, y'all, for who are listening to this, it's tough to have a great partner to JV on other deals, because I JV with people on all types of projects, because I'm not running, like, I don't want to be out of my family office all the time, right? Running around all over the world. That's not my thing yet. It's just, I'm designing my businesses around me, right? And what I want. And so I'm looking for people all the time that fit that position. And I never knew I was supposed to do it with the personality profiles and really looking at what's their motivating factor and how are they looking at stuff. And so for those who are listening, Tom would share with me going, why don't you just practice? Like, go around with people and just practice interviewing people. They might not know it. It's a stranger that you'll never know, and just kind of guess. I wonder if they're an analytic personality, and maybe they fit more of like a relational type person, and start looking at those things. And I just want to say, Tom, that has transformed my life. I know businesses right now that are having me come in to help them with their organization and processing. And the first thing I go is, okay, did you guys read The Speed of Trust or listen to the audio, which is what you just talked about? Your guys' trust level between your two partnerships are so high, you can read each other's minds, and you know with the most integrity, it's done on the up and up. Even if there is a mistake, it's not a malicious mistake, right? Absolutely. So that's huge, and that's what helps you move faster. And the other part is, I go in and I ask people, I say, what's your personality? Like, do you guys all know each other's personality and how you guys operate? Well, we think it's an 8, but really it's probably like 0 to 10. We think we know each other at an 8, but really we know each other at a 3. I'm like, okay, well, let's start working on this, because it helps a team grow so much more effectively by knowing how each other are. That's just how they're not being rude. That's just how they are. And It takes all people.
Yes.
Right, to do
that is so true. And, you know, when I counsel and coach other real estate investors, you know, one of the biggest ceilings that people hit is not wanting to grow a team, because they've tried it before. They've had 2 employees. It sucked. So they got rid of their employees and said, screw it, I'm just going to do it all myself.
Right.
Well, I hate to break the news to you. You'll never be big in anything by yourself. Right. Because number one, you are only one part of 4 personalities, right? You're only good at certain things.
Right.
All the other things you suck at. Okay. Just like I do. So I built my team to make sure that I covered all the things. So, but we also teach each other. We teach that, hey, yeah, Joe's a little odd. You know, he's not really a people person, but that's okay, because he's great at fixing your tech shit when it goes bad. right? So Joe's cool. We got to keep Joe. And we got to like Joe. Even if he's a little odd, it's okay. Because, you with your bubbly personality couldn't fix crap. And then, of course, that person's like, yeah, that's for sure. I couldn't.
Yep.
Okay. Yeah, you're right. We do need Joe. Okay. By the way, we don't have anybody named Joe, but I'm just using examples.
Right.
We have to have all personality types in a business if it's going to grow and become large. And there's 4 main ones. We got to have them all covered, which means you need a minimum of 4 people in your company at some point if you're going to get big. And you won't be able to do it all at once. But if you don't understand personality types, I would encourage you to start studying that. And then I would also encourage you to teach your children that. We teach our children, we taught our children, they're now adults. We are now starting to teach our grandchildren personality types because it will help them so much in their interpersonal relationships, not just in business, but with their friend groups, in school, understanding their teachers or instructors, understanding their parents and why their parents do things that annoy them, right? All of those things are explained if you understand personality types.
It's a beautiful thing. You told me that you guys would share family stories as the kids were growing up. This was so much in your guys' culture in the household that they would highlight, as they're telling a story from school or work, or like, okay, yeah, Gabe over there. Oh, by the way, he's this personality type. And, and you would describe them right after. And it actually paints the picture of the whole story. It's more vibrant. It's more colorful of going, oh, now the story is super funny. Right. Because now you see the whole thing of the personalities. And we've been learning how to apply that with our kids of going, look, this is just personality. This is who especially with like just enjoying your own family, going, look, this is how my son is. Like, just let him have his alone time because you're going to really bother him. He just needs to be by himself for a while.
That's right.
Totally cool. Tom, you are a big blessing. You're a blessing to this whole environment of the real estate investors. Real quick, like we're going to clap it out. I guess it doesn't have to be quick, but we'll close it out. What is something that people can connect with you on and stuff that you're working on that you would want to share with everybody?
If you wanted to follow me, I have a Facebook page, Tom Berry REI is the Facebook page. Follow me there. I get into some really goofy deals. As a lender, we've got a couple of videos up there where we lent on a container home community in North Georgia. A buddy of mine also has a treehouse Airbnb. We didn't lend on it, but he's let me do a video on that. We have a meat processing plant that we purchased in January this year. We're doing a full-blown rehab on that plant. I got a lot of videos up on that and that process. A lot of people have felt that was kind of cool to watch that as it transpires. So that's kind of stuff I put up there. And, just videos that, with information kind of like what we went through today. I'll pop up a video up there, just something that's heavy on my mind that I want to share with people. So if you'd like to follow, that's how you do it on my Facebook page, Tom Berry REI. And,
just put that on here.
Pretty much it.
There's a link, guys, on here and all the different chats that we are on. We're on Facebook, YouTube, Instagram. I don't even know what else we're on right now. So there's the contact information there, guys. Thank you so much for joining, for being part of this. If you have any questions, I'm pretty serious about this because Tom is just one of those guys that he's hard to get a hold of, but when you do, he's willing to just educate. He loves this great nation. And I know he loves seeing other successful business owners grow. And that's definitely his and Melissa's heart, because he wants to see other people's legacy and their other families. And he's definitely done it for mine and my family. We would not be here where we are without the Tom Berry. So if you have any questions or anything like that, ask them to me, text me, message me, and maybe I can figure out a way to get another conversation with Tom and move forward. So if you like this, share it, post it, share it with your friends, especially this one right here for market conditions, and then really how to get involved with doing bigger transactions and create that legacy for your family. Guys, thank you so much. Tom, I appreciate it. We'll talk to you guys later. Peace.